Welcome to the Derek Loudermilk Show. This is episode 351 with Eliot Brown. Eliot Brown is a Wall Street Journal reporter and the author of The Cult of WeWork, Adam Newman, and the Great Startup Delusion. He also happens to be my college roommate and my cross-country teammate, and it's such a treat to have him on the show. And Eliot covers startups and real estate for the Wall Street Journal, which is exactly what WeWork was. And as his friend, he was telling me about the story as it was unfolding, and it's so crazy. So many things went on, but basically this company, which ended up, it's really just a desk rental / co-working company called WeWork, became the most valuable, largest $50 billion valuation startup in the world. Perhaps maybe just America, but I think in the world, only to have it come crashing down. And there's this charismatic founder who basically sold everyone into investing in his company, but it was all built on sand. Why does this happen? Well, Eliot talks all about why all this happens in this episode. For one, we're going to talk about why there's so much money that people want to invest in startups. They're looking for these unicorns. The venture capital world is really looking for the Facebooks, the Ubers of the world that are giving them a huge return on their money. But there's only so many companies that you can invest $1 billion or multiple billions of dollars in order to get a return. So we're going to talk about the economies. We're going to talk about Adam himself, how all these things lead to these crazy valuations, and the system itself is inherently, it's not right. Something's not right about it. And he'll tell you what's going on and maybe what we can do to fix it. On top of that, I asked Eliot about journalism, and I recently read a stat that was like 80% of people in America don't trust the media. Well, that's not very much. And when I talk to journalists like Eliot, they say we have to verify our sources so much before we ever put anything to print. So how could you even begin to think that we're making stuff up? So we talked a little bit about, from his perspective, he's worried that people don't believe him, even though he does a very thorough job of reporting. So we talk about the state of the media and truth and how people are getting their news these days. And as someone who knew Eliot 20 years ago when we were just college kids, I can tell you that he has really impressed me with the work that he's done around WeWork and the whole startup scene. He knows this venture capital startup world very well. So you're speaking with one of the world's expert reporters on this topic. So without further ado, here is Eliot Brown. Eliot Brown, welcome to the podcast.
Howdy. Thanks for having me.
My pleasure. And let's just start. We're going to talk about WeWork today. You've been covering this for the Wall Street Journal. You've made it to the big time. Everyone listening, Eliot and I were roommates back in the day, and you used to work for the Peoria
Journal Star,
which is where all good reporters get their start. Now you're covering Silicon Valley and finance and billion-dollar fake companies, and you got this book. It's right here on my desk, The Cult of We. It's a great book. Congrats, by the way.
Thanks.
It's a hefty tome here.
Yeah, it's too long. I'm a little embarrassed by that because I don't like reading books that are that long.
Well, I definitely also want to get some stories that didn't make the cut because I know you had to trim a bunch. But let's just talk about WeWork and how did you get to be the person writing this book? How did you get into being a WeWork expert?
So back in 2013, I was covering the office market and like real estate for the Wall Street Journal, and so my job was to look for interesting things going on with offices, which there's not that many interesting things going on with them, it turns out. And at the time, there was this kind of nascent trend of co-working where, like, I don't know, my brother worked in a space like that. I had a bunch of friends who were working in them. And so, like, it wasn't an unknown thing. It wasn't a completely new thing. But WeWork was this company that was kind of fast growing in Manhattan. So I figured I should talk to them. And then I met the CEO, Adam Newman, and he was just like totally full of energy, and it just seemed weird and potentially like interesting for his story. He was kind of bouncing off the walls. And then he was also like, this isn't a real estate company. You're a real estate reporter. Why are you interested in us? Don't you have like community reporters who talk about building community? And I was like, I think that would still be me. Anyway, so I was interested in them, but then like the thing that really got me super interested and became essentially the focus for years was why, when I found out their valuation, which at the time was like $1.5 billion. And the concept of valuation is actually really important for a company, particularly a startup, where if you're considered by investors to be really valuable, you can raise a lot of money and then you use that money to grow. And if you're sort of valued at a more normal amount, then you just sort of grow based on the profits that you create. So 1.5 billion was an enormous number for a tiny company like this. And that became the sort of the basis of everything. Like, how are they worth so much? And the short version was they essentially made the world think that they were, and they too thought they were a tech company, but they were not. They were very clearly a office space company, and a poorly managed one at that.
Early on, I believe there was 1 year when they were actually profitable, right? They actually were small enough, and they, were capitalizing on this trend of people like me at the exact time of year, like 2014 was when I went to my first co-working space, and I was like, this is great. There's other people I want to be around. I need a desk that's not a cafe. It was like the trend, and they were capitalizing on it, and they were profitable early on.
Totally. So yeah, the story of WeWork is, and the reason it's interesting and anyone is willing to have me on their awesome podcast, is because it ended in this total fireball of an implosion, and it's a story of failure. But like the basic business of I lease office space from a landlord and then I sublease it to people sitting at a desk, like that actually works. It's a real business. And so WeWork, as kind of an early mover in that space, and someone that was actually pretty good at it early on, like they found a way to make money out of it. And so it's like, it's like a good business, especially when you hit it at a time in New York when there was this real kind of cultural shift. It's sort of like the casualization of work. Back then, at least I was like going into offices and everyone was wearing suits and ties and stuff. And the more millennial generation was kind of coming into the workplace and being like, why would we do that? I just want to wear jeans. And I don't want to sit in the stuffy office. I want cool design. And we were kind of hit that when there was this untapped geyser of demand. And so, they were actually able to turn a profit briefly.
And so what was it, do you think, that caused Adam Newman to want to like turn it into something else? Because they were talking about community. They were talking about changing the world, elevating consciousness, all these lofty ideals. Why did it morph into the train wreck it became?
Yeah, so I think it's two things. One of which is just greed. I think Adam, I didn't actually believe before this book in the concept of greed. I sort of thought that was just the baseline of like, well, in a capitalist system, people are supposed to maximize their net worth. Like that's what you should assume of people. But Adam had so much more desire for personal gain at the expense of others often, that it really changed my view on that. So he had this extraordinary desire to become extremely wealthy. And then you mix that with, and this is sort of the bigger factor here. You mix that with a finance system that was just like totally thirsting for anything that resembled Silicon Valley innovation. When there was just, on a macroeconomic sense, like there was just tons of money pouring into investment funds that wanted to find the next Facebook, and venture capital funds that wanted to find new innovations that are groundbreaking. And when you have so much more money than you have good ideas, then that leads to situations where people have to invest in things and that aren't great ideas, and they kind of rationalize it in other ways. So that's a rambly way of saying that Adam, this kind of greedy guy who wanted to become really rich, mixed with a finance system that was just hunting for people who kind of exhibited the right characteristics that sort of look like an Amazon or Apple or a Facebook CEO, and then just give them money.
And do you think it was because Adam married into a sort of wealthy family and he was surrounded by wealth, and so do you think it was like the comparison game where everybody else around him was already wealthy and he just felt it was, just an ego-driven type of thing?
Well, ego is certainly a huge part. Like, I think he's fantastically insecure. And so no matter how much he'd have, he'd always want more. And, we saw a video of him when he was 22 or 21 in Israel, talking about how he was going to go to New York, and he was just like bragging about how he met Matt Damon at a bar. And so then that sort of continued throughout his career arc, where every famous person he met, he always wanted to meet a more famous person and always wanted to find a cooler rich person. So, I think that he immediately, he met his wife, Rebecca, Newman, then Paltrow was Gwyneth Paltrow's first cousin, is Gwyneth Paltrow's first cousin. And so I think that really excited him, and he saw this entry into wealth. But I don't think, had he married into a trillionaire, I don't think that would have been enough. I think he kind of just always wanted more.
Mm-hmm. And I was just interviewing a private equity investor, and he said something like, we get a lot of no's, the founders of companies don't want his millions. Mm-hmm. And he said, we're, it's a privilege to be allowed to give money to these companies. And it speaks to that competition of there's so much wealth that wants to find a place to actually grow, because you can't put it in a savings account. It's going to inflate away and all this stuff. So it's this huge competition of just give us somewhere to put our money that's actually going to do something.
Yeah. And so that hits at another part that we really hit in the book, where you have all of these funds that are competing, fawning over these kind of male messianic type ego-driven founders, because that's the type of company founder that tends to do well. So some of them are kind of crazy. And then at the same time, one of the things that they will do to convince the founder to take their money over the next guy is kind of do things that are unsavory in business. And so one of those is they'll give the founder money, just allow the founder to sell some stock, which normally you didn't do in pre-public companies for startups. You kind of wait to see if the thing can make a profit before the founder can get rich, because you want the founder aligned and not to just, essentially do what happened with WeWork. And so they would do that. And then they also would do this thing where they give the founder the full control. So these companies, these investors are often putting up all of the money, right? And so typically, if you're putting up all of the money, the founder doesn't own all of the company. The founder, the investors own the company, and the founder owns a slice of it for kind of coming up with the idea. So what has happened in the past 10 years is that these super charismatic founders have managed to have so much demand from investors that they're able to say, well, I want to take your money. You can own most of the company, but I get to have full control over the company. So the investors are giving money, but have no ability to do anything about what the company does. So that is what happened with Adam Newman. He was able to both take out an enormous amount of money himself before the company was successful, and he was also able to maintain full control of the company.
So give us the sort of the arc of WeWork from 2013 to where it is today, because it's still a company, right?
It's still a company, yes. So back in, it basically for most of the years of its existence, it was just kind of a co-working space. So where they had locations where they would lease from a landlord and then sublease to tenants in common spaces that they retrofitted with cool hip design and cucumber water and coffee and beer. And then each year they would double in size. And so they essentially just kept growing to become a rather large company that by 2019 was taking on $2 billion of revenue. But as they were doing that, they kept having to raise more and more money, and they did it at higher and higher valuations. So the most interesting thing that was happening was their valuation kept going up. And so by 2019, they had raised $10 billion and were valued at $47 billion, which was the most valuable startup in the country. Right after Uber had gone public, and it was more valuable than Airbnb. And that was, in the end, it proved to be like, then what happened in later 2019 is it was all a mirage, and it kind of had this really high altitude tailspin that had a fiery crash landing, where the Adam Newman and the company tried to raise even more money, but they went to the public market. So they tried to list on the New York Stock Exchange or the NASDAQ. I actually forget which. When they did that, the investors in the public markets kind of looked at the company and were like, this isn't a tech company. This isn't worth $47 billion. You're losing $2 billion a year. You have a CEO who appears to be a maniac and has all these conflicts with the company where he's like enriching himself and at the expense of others. It's full of crazy language that nobody understands, like how the company's mission is to elevate the world's consciousness. And so then essentially the public investors balked and wouldn't give them money at any price or any reasonable price. And Adam was forced out as CEO, and the valuation plummeted, and thousands of employees lost their jobs. And investors lost billions of dollars. And then that was sort of essentially where our story ends. Like, there's more recently, the pandemic happened. And so then WeWork, continued to lose even more money, and now is a larger company that is kind of trying to position itself to recover post-pandemic.
And it would just be sort of simply a co-working company.
Yeah. So before, it was constantly like talking about how it was a consciousness elevating company, or a tech company, or a company that solves world hunger, or Adam seemed to think it would be this post state boundary, capitalist uniter of the entire world. Now it is more clearly a real estate company, which makes it valued much less. So even though it's even bigger than when it was when Adam was there, it's now worth like $8 billion, down from $47 billion.
Okay, so it's it fell a bunch, but it's still a large multinational.
Yes, though it's not an example of a good investment strategy. I mean, they took like $12 billion and turned it into a company worth $8 billion, and so that's generally not the way these things should really play out. But it is a real company with real offices today.
Okay.
Yeah.
I think a lot of people, and in this podcast, even we want to elevate the world's consciousness. We want to, move past borders and things that divide us and all these things. So the language that he was speaking is very appealing. Do you think that they succeeded in part in any of those lofty aims?
No. I think that reality is really important, and this was fake. I don't think that it was a master plan to be fake, but I think that Adam was living in a world that wasn't real. And I think if what Adam did with WeWork and the way he positioned it is almost the exact playbook for what you would do if you had a fake company that you wanted to get a really high valuation and get really rich and kind of fool the world. So just because you say you're elevating consciousness does not mean you're elevating consciousness. It was like very much at the end of the day, a real estate company. And so one of the main things that the main selling points, I guess 2 points. there was never any sort of cohesive vision for how they were making the world a better place. They talked about how they were bringing people together, or they were a physical social network. But, you know, a way to look at that is, well, that's what life is, right? Like, I mean, that's what anything is. Like, you know, a beach brings people together, like a park does. The more tangible thing that they would talk about was how people would within WeWork, different tenants would rent next to each other, and then because they had these shared common spaces, they would do business together, they would interact, they would become friends, and everyone was friends, and you know, then the world would get much happier and better because of it. I think that was probably true early on for a few of the early spaces, but then as WeWork grew, the research department there actually did a study. And they found the study was are our members friends, or I think that was the title or something like that. And the answer was no. People didn't really have friends outside of their own company. So just because you say you want to elevate the world's consciousness does not mean you're doing it. And even if you say it convincingly, it's probably an inverse correlation with whether you're actually doing it. I mean, this is just a story about a salesman overselling something, which there, in my view, there's no other way of looking at it.
Yeah, and I'm thinking how I've been to co-working spaces in a dozen or more countries, and that was my hack. Was I would move to a new country, and the first thing I would do was go to the co-working space, make 25 friends, and all of a sudden I had a community of people where otherwise it's hard to crack into a new, friends group if you move somewhere. So it was like the co-working was the in. It was the like, here's who your friends are going to be. So it's kind of interesting that WeWork didn't have that.
Oh, yeah. I mean, I think, and again, I think that did happen at first. And a lot of the thing with WeWork spaces is architecturally, they didn't have that much actual co-working. It was mostly just offices divided by glass. But I guess I'm not saying that didn't happen at all. It's like, but that doesn't mean you get to be valued at 20 times what a real estate company is. Right. The reality is, like, you can call yourself, even if you are elevating the world's consciousness, what's that worth? And it like, let's say WeWork had whatever that means, had elevated consciousness. The reality is their revenue was still their revenue, and their profits were still their profits. And by profits, I mean, losses of 100% of revenue. So that doesn't make you valuable. It just, I guess, is something that even if you're successful at it is completely unrelated to business.
Yeah. Let's talk about these, because he was enabled by this Japanese investor who managed the, I can't remember the name of the fund. It was a $100 billion fund, huge fund. And then that money originally came from Saudi oil money fund.
Yes.
So like, how did that happen? Because it's like a funnel. Like the money is flowing from this.
It's kind of crazy set of coincidences. So like part of the whole WeWork madness was the finance system doing what we talked about earlier, like where it was just primed to look for Silicon Valley, and there were these big structural macro things at play. But the other half of it was a series of coincidences between these combustible egos, like three of them really. So I guess sort of the most important player here in the background was the Mohammed bin Salman, who's the crown prince of Saudi Arabia, who is probably best known for being allegedly implicated in the beheading of Jamal Khashoggi, the Washington Post columnist. So yeah, great company. He's taking power within his family and the country of Saudi Arabia at kind of this very crucial time for the story, where he's consolidating power and has this vision of like diverting a lot of the country's oil wealth into high tech economy and startups. And so he is like a real kind of fetish for Silicon Valley innovation. And so he's like, well, let's sell a huge chunk of our oil company and just plow that money into startups. And so that's kind of his plan. He hires some people to do it. And then at the exact time that he's trying to do that, in one fell swoop, Masayoshi Son, the chairman of SoftBank Group, who's this kind of well-known tech investor who's super high risk, has a super high risk tolerance. He comes to or meets in Japan MBS and says, I'm trying to raise the world's largest investment fund that's like 30 times larger than the next largest venture capital fund. And I would like you to fund it. And it's sort of these light bulbs go off, and like they actually are both looking for the exact same thing at the same time. And then he agrees to write a $45 billion check to Masayoshi Son, which is just this kind of unfathomable amount of money for this stuff. And so that therefore arms SoftBank with by far the world's largest investment fund, and then it needs a place to spend it. And, you know, Uber and Airbnb don't really want his money. And so, or at least not at the time. And so he needs to find someplace else to put it that's big and to show he can get into a big company. And so WeWork is sort of there at the exact right time saying, like, we can take billions of dollars. Like, we're elevating consciousness. And Masayoshi Son was really big into AI, artificial intelligence. And so he managed to be convinced that WeWork was an AI company because they used AI, but in the same way that I think like anyone uses Microsoft Excel. But when you have money to spend and you need to spend it, one of the things we've learned is you can convince yourself of anything.
And so these numbers, these figures of like, okay, a $50 billion valuation and a $100 billion fund, and I don't know, they're all sort of unfathomable to me. Like when you add a bunch of zeros, like I really have no concept of like, okay, that's worth what, an entire city worth of buildings, or, you know, what can you actually buy with this stuff? What's your concept of money and wealth as it flows through the world now that you've like been exposed to these like enormous sums?
It's all fake. Yeah, I don't know. I mean, billions seem to go quickly. What is my concept of money? This isn't really an answer to your question, but like, I guess one of the things I learned is how careless and reckless people with enormous sums are or can be. I kind of had assumed naively that if you're overseeing that much money, then you're making much more studied decisions, but in terms of how you spend it. But what we saw for SoftBank and for multiple other investors was this concept where these investments would literally be decided after minutes into a meeting with Adam Newman. So he was just such this charismatic salesman that in a one-on-one conversation with the CEO of SoftBank or whomever else, he convinced them that he had such an amazing business and that he was so talented and such a good salesman that they literally within minutes would decide to give him hundreds of millions or billions of dollars. Then you're like, well, if they're clearly it can't actually be that simple. They must be doing due diligence. So then what would happen is these funds would, after they had made this initial sort of commitment, they would look into it. They'd have analysts type things into spreadsheets and bean counters do their thing. And then the analysts would come back and at multiple funds, they would say, this is a real estate company. This is incredibly overvalued. This is not a good idea. But then the decision stayed with the guy at the top who said, well, you know, I think that it's Adam said this, and this. Like, it's a good bet. Like, who knows? Maybe it won't work, but it probably will. And the company's growing like gangbusters, so let's do it. And so the recklessness, like, I actually didn't believe that at first. I kind of figured there would be more to the story. And then when we looked into it, it was like, no, that's what happened.
Wow. Yeah. It's like, so all the cooler heads didn't get heard.
Yeah, they got like paid to write their reports, but the decision was made. It was like, this is a gut-based decision, and like one where you actually can just in person sell somebody something in the same way that like a knife salesman could go door to door.
Yeah. So sales skills. Super important. One
Oh,
takeaway.
yeah. I mean, Adam, that is 100%, like, Adam Newman is a salesman. That's all he is. Like, he's clearly not like an innovator. He's just like really good at sales and extremely talented.
I'm also thinking about, like, he did that China trip to get a bunch of investors from China, and almost everybody said no. But so the thing is, like, you only need the one person to say yes with a big checkbook. So you can afford to fail a lot and still get a big paycheck.
Yeah. It's a really good point. Like, and that's sort of crucial to understanding a lot of what's going on in startup land these days, where if you're trading on the stock market, it's like I think Warren Buffett says it's like it's a voting machine, something like. He has some brilliant quote that I'm not remembering. But the idea is, like, if you're on the stock market, people like you, the stock goes up. People who don't like you, they sell the stock, and then you arrive at a price. If you're in the private market, it's very different. So what you're doing is you can ask the entire world, save for one person, to say, well, I'm a $10 billion company, and all 7 billion people can say no. But if you find one that says, well, I'll buy $100 million of your company at a $10 billion valuation, then that's your valuation. That's often what happened with WeWork is they found, for a while, SoftBank was the only investor funding them toward the end. But before that, like you referenced this China trip, what they did is they went around China and had all these booze-soaked meetings, and were flying in booze-soaked jets, and surveyed the whole landscape. And Adam kept wanting this huge valuation at the time of like $15 or $20 billion. And everyone was like, no. But then there was one guy who, within minutes, was convinced to invest with Adam, and he just thought they had something, some bond. And this was a guy who was really trying to diversify his fund into U.S.-based companies or globally, companies that were global companies based outside of China. And so it was sort of like fitting the square peg went in the square hole at the exact right time, and Adam got $500 million.
This seems like a great cautionary tale for the system and for individual investors. Do you think it's had any impact?
No, none. I think for a while after WeWork, and this is what actually happened when we started writing the book, like, we thought it was the end of the era, where finally sort of the world had woken up that, like, narratives are not businesses, and stories are dreams, and like, maybe you should kind of look at what the business actually does today instead of what the charismatic male CEO says he'll do in the future. That worked. It really did. The failure of WeWork, it really did chill the market for a while. It was really hard to fundraise. If you were a large private company, suddenly venture capitalists were talking about how founders might not be these omnipotent beings with superpowers, and maybe they should be restrained. And so that lasted basically till the start of the pandemic. And then, the markets kind of went crazy. They went down, then they soared back up. And then you suddenly started seeing, particularly with Tesla, the rise of Tesla stock that just defied gravity. And then you have this whole parade of electric vehicle companies that haven't even made anything and are worth billions of dollars. And then you see founders generally of companies getting huge pay packages for themselves and getting even more control of companies. So I think it's like, I don't think anyone today is investing in a co-working company and calling it a $47 billion consciousness elevating company. But like, there's not restraint in Silicon Valley as a result of WeWork in any big way.
And do you attribute the lack of restraint to just everyone having extra cash because of Fed printing a lot of money?
Yeah.
Or
yeah, totally. I think it's just like the same thing that caused this in the first place, whereas like there's too much money trying to get into too few companies. The other part of it that is worth mentioning is there actually are successful companies that come out of Silicon Valley, right? Like it's not all these hollow paper tigers, or paper mache co-working companies. it's like they tend to be actual software companies, because that's the thing that's actually a good business model. Unlike a real estate company where every time you add a user, you have to build them a new desk and add a new office. With a software company, you just send them some bytes through the tubes, and then they pay you money. So there have been some really good, actually valuable, legitimately profitable companies that have come in the past however many years, except they're a lot more boring, and they're like, called like Twilio, and they all are about software as a service, and like businesses paying businesses for software, businesses paying software businesses for software, consulting and advisory and software. I think that those two things combined, like the fact that you still do actually create things in Silicon Valley that are really valuable, with the too much money out there, leads people to have all these false positives still.
Mm-hmm. You mentioned to me as we were chatting, prior to the interview, that you had to cut a bunch of interesting anecdotes from the book. Would love to hear any tales from you covering this whole saga.
What did I'm trying to remember things we did. So one of the so Adam has, his wife is kind of kooky. Like we didn't get that much into this, but she was really like she was responsible for a lot of people being fired. Like she would make snap decisions about people and fire them. So one story is on his first or second day, there was an airplane mechanic. And why does a co-working company have an airplane mechanic? Well, it's because it bought a $63 million private jet. And so if you're going to buy a top of the line private jet for your CEO, you might as well have an on-staff mechanic. So the mechanic is on staff. Rebecca, Adam's wife, meets him, and within minutes then complains to Adam, who then, within minutes makes a decision, and then, subsequently complains to Adam, who loops in his staff, and the decision is made that the mechanic needs to be fired because Rebecca does not like his energy. And then this became a frequent problem. They were churning through airplane staff, and so toward the end of their lives at WeWork, the HR department had to offer so much of an incentive to get a pilot. They had to, and staff, like they had to guarantee a pilot would be paid 100% of his salary for a whole year, regardless of how long he lasted. So because, they were prone to firing pilots apparently. So,
and what is it, do you think, about like pilots and air mechanics in particular that have do they have a certain type of energy? Do you suppose?
No, I think that, I think, or what everyone said was that Rebecca was absurdly neurotic about the plane, and very nervous about, I don't know, pilots doing this or that. So, and the crew kept getting fired. Because you have stewardesses or whatever on the flight attendants on these. It's a pretty, it's not a full size 737, but it's not a small private jet. It can fit like 16 people. So she was super neurotic, and actually, like, another issue is they once made a top executive there effectively be the guinea pig, because they didn't want to be the first to fly it at WeWork. So they had someone else fly it first to, make sure it would not crash. At least that was the impression that's had.
I remember there's one of the photos that you put in the book is, as I was flipping, because I went to the photos first.
That's the intent. I don't know why we put them in the middle.
Picture of a fire extinguisher. And I was like, why is there a picture of a fire extinguisher here? But that's did he spray that on Masayoshi?
No, it was the Chinese investor. So when after having this boozy trip in China with this guy who's promising over $400 million to WeWork, Adam then invites him to New York to sort of finish up the deal. And there's a party that WeWork has at this location of one of its new buildings, where they were actually doing We Live, which was apartments too. And so then as the night drags on, there's a few people left, and Adam brings everyone up to the roof. And you weren't supposed to be able to get to the roof, but Adam sort of figured out a way. Someone else got in trouble later because it's supposed to be Adam-proof and resident-proof. Like you don't want residents going on the top of the building. So he goes up there and then starts giving speeches and has everyone do tequila shots. And then he's a crazy guy. And so then he brings out a fire extinguisher and then just sprays the crowd with it, including his new investor who was sort of like half covered in this white foam. And so the picture was of the next morning when someone had to go clean up the fire extinguisher and tequila shots.
Tequila seemed to be the fuel. That was the preferred. Always appearing in the story. Like, here come trays of tequila shots.
This is one of those culty aspects where Adam wanted to impose his or thought that his view of what fun was should be absolutely everyone's version of fun. And so he liked tequila, and therefore tequila was what the company drank. And so they would literally, particularly in the early days, have trays of tequila that would come out for all the locations would have these little mini plastic shot glasses and bottles of tequila on hand. And then they would just pour shots for the whole company, and then everyone would toast together. And like, it was sort of, some people told me it was kind of a coup when they convinced WeWork to also pour some water shots for the people who didn't drink alcohol, so they didn't feel completely left out. And so, Adam loved Don Julio 1942 and would just routinely, this is how he was a good salesman, like at 10 a.m., some investor would walk in the morning, and a potential investor or landlord, and Adam would be like, welcome to WeWork, and like, here, we have fun here. And then he'd make them do tequila shots with him.
Which is, reminds me of Mad Men, and seeing how much they would drink. And it's kind of crazy that business was able to function. I can't really do anything after half a glass of wine, but it would be early on, and then this would happen in the evenings too. Like, he would show up drunk at meetings sometimes and kind of spout out like crazy goals. We have this scene of meeting with a bunch of real estate executives where they're sort of lagging in their targets for the year. And Adam comes in and he's drunk and then passes out. He's like, get the tequila. And they pass tequila shots for everyone in the room. And then he goes around the room and says like, well, how far off your goal are you? And they're like, I'm 20% or whatever. And he's like, okay, well, the new goal is like 50% higher or 20% higher. And so this is while intoxicated or while apparently intoxicated. I've made some pretty good decisions while intoxicated, for sure.
Some people can do it. I'm not one of them.
Definitely some epic road trips undertaken immediately afterwards. You mentioned We Live. Did they have any success with this co-living situation?
No, and that's one where I think it's actually kind of like like WeWork. I don't think it's a like totally insane concept of having people live in essentially like cool, better dorms. The problem is the economics don't really work very well. So, and they, somebody I'm sure will figure it out to a certain extent, but all of this was like tech money going into really complicated real estate. And so WeWork economically was at least an okay concept, because what you were doing is, what WeWork was doing was making the office more dense. So say a normal floor can fit 100 people. WeWork would pack 250 people in that same space. And so economically that actually can work decently well. I mean, they would waste the money on jets and cucumber water, but and wave pool companies, but at a basic concept that can work. With apartments, it's really difficult to get 3 times as dense, because you kind of have tenement laws. You don't want to create something where it's like 1910s Lower East Side, where 9 people are sleeping in a room, like that leads to the plague, and other like unpleasant things. So nobody wants to live or very few people want to live in like a shoebox. And so you need to give them a little bit of space, but then that makes the economics much more challenging. And then the other thing about apartments is just the architecture is and engineering. Like you can't just renovate an office building and turn it into an apartment cheaply, and you can't renovate a existing apartment building and turn it into co-living very cheaply, like because bathrooms need to move and load-bearing walls need to move, and so it becomes much more complicated than the sort of standard vanilla WeWork office space renovation.
Gotcha. I have some friends that have this vision. They're buying land right now to create kind of like a retreat center / commune / village where you know, like we take what people actually want in living and live with their friends. And one of the best things, like we met in the dorms in college, you know, like the dorms were great because like you get to see your friends all the time. So what any advice for them as they sort of like embark on because I don't even know if they know how they're gonna fund it or build it. Any thoughts on like how to do that well?
Yeah, I mean, my sense, and this is not like having spent that much time looking at all the underlying numbers, but I've seen a lot of these companies come and go, is like it just doesn't seem like a venture capital friendly investment. And so I think that's kind of the thing that everyone always tries to do is these days, like the way to raise money is venture capital and you need to build the biggest thing ever. And that just seems like this kind of mistaken meme that leads to really disastrous situations when, like in the old days, you could open an ice cream shop and your first thought wasn't, I need to raise money from venture capitalists. It was like, maybe I should make this ice cream shop pay for itself. And so like, I would imagine there's a way, and it like certainly talking to people, it seems there's a way to do this on a small scale. And like then
people buying shares, like maybe a few private investors, you know, kind of almost crowdfunded or something like that.
Yeah. I mean, you know, or debt, which is probably harder because banks like to see proven concepts. But yeah, I mean, if you get investors and then just like actually do something that can be profitable and then you live off the profits, and then if that works, you build another. And so like, I think there's this tendency that everything needs to be fast growth. And that's really hard to do, especially with physical concepts that aren't like software that don't have these really high profit margin, you know, businesses, because it takes a lot of like it's challenging to figure out what works. Like you don't know that's kind of the point, and then you have to iterate and change things and tweak things, and sometimes that can take many years. And with buildings, it takes multiple years to actually permit and build the building, and so none of this is really geared at just like nothing is sort of in the favor of the venture capital type investment for this type of stuff.
Yeah.
I mean, the counter to that is like, that's where the easy money is. Like, it's a lot harder to raise money for something more rational. But if you can tell people a kind of big story, then you get a lot of money, but then it sort of, at least so far, seems to have led to inevitable disappointment.
Yeah, I'm wondering if there's like a fund that doesn't want any returns. Like that would be, you know,
that would be great. How about negative returns?
Let's talk a little bit about the journalism side of this thing, because it seems like, you know, you were telling me like, hey, here's this other new ridiculous thing that's happening, and you were like this voice, kind of doing what journalism is supposed to do, like being like, hey guys, everyone's drinking the Kool-Aid or the vodka or the tequila in this case.
Yeah.
But like, let's take a closer look. And so we're the analysts at those funds who were trying to, you know, raise the red flags. But it seems like a lot of other journalists were just, you know, heaping praise on it.
Totally. Yeah, no, this was a real frustration. And like, to be clear, like there were some other journalists that were doing good stuff, but the and like skeptical coverage, but yeah, like the vast majority of stuff that came out about WeWork was really just buying the hype. And like, this is a thing that personally led me to want to cover venture capital. It led me to enormous amounts of frustrations and sighing when I'd read TechCrunch or Forbes. And we're just all, as humans, prone to optimism. And, you know, that's fine. But like, one of the roles of journalism is to I think, is to have, to be grounded in reality and to keep an eye on the laws of gravity. And so what that means with at least from my view, with a lot of this venture-funded entrepreneurship is venture capitalists, the investors and the founders will talk about these things in the future as though they're today. And so they're like, we're disrupting the mattress market. And like, we're taking all this share and we've reinvented how to mattress. But then you peel it back and you look at like, well, whatever company you're doing is like, well, you're losing money on every product you sell. And like, you do have a cooler website with sans serif font, and like, you clearly do have a kind of a stickiness to your brand, but are you actually disrupting this because the product is much better and it's like long lasting, or are you just disrupting it because you're subsidized by venture capital now? And like the answer is almost always, well, today it's because we're subsidized, and like, maybe it'll work in the future. But that's not how they present it. They present it as, the world, like X industry, is being completely disrupted by this new innovative concept. So I think it's the onus is on the journalist to be like, well, what are you doing today? Like, let's not really talk about your future vision much, because that's a dream. And like, how's it going today? And like, does it have momentum, and could it do so? So it's to really pare back a lot of the hype. And so with WeWork, I think the especially like Forbes, Fast Company, Inc., TechCrunch, the New York Times, especially on this big Sunday business feature, they just weren't peeling back the hype, and really did buy the line when this guy says, you know, they would all include skepticism within the story. They're like, well, WeWork, if it is a real estate company, it's overvalued. But it's like, why are you just repeating their mantra that they're a consciousness elevating company and bringing people together? Like, what about that makes that a good business? And like, at a certain point, these numbers, like the numbers weren't hard to find. We reported them about how much money they were losing. But you didn't need to be that smart. Like I took a single econ class in college, and, you know, I took math in middle school. Like it didn't, it doesn't take that much, but it's important journalists like at least stay grounded in reality.
I have a tangentially related question about journalism, in that a lot of Americans don't trust the media these days, and it seems that whether it's TV or newspapers, like, they're hiring people with a particular, like, who already sort of buy into what the paper stands for, like, if it's left wing or right wing or whatever it might be. So you get a lot of the journalists, they all think the same way, and then maybe the ones who are going against the herd are just let go or ignored or pressured into doing their job differently. Have you, like, what's the Wall Street Journal like? Have you experienced that sort of like being forced away from something that you wanted to look into, or do you feel like it really is doing the job that it's supposed to?
Yeah, I mean, I'm largely baffled by this kind of broad perception of the media, because like the reason we get into it is and like really on a daily basis, the focus is so much on like truth, that we're considered to be people that's dispel, like, you know, spread lies is like the opposite of what we care about. I mean, the amount of queasiness that you get, if it like, certainly I literally get like very nauseous when I have a correction on a story, to the point where it's like I misspelled somebody's name or got their title slightly wrong. And then if the premise of the story is wrong, which doesn't happen, or certainly not for me, and it's extremely rare that happens at a credible publication, you know, that like you often get fired, and like it's the worst feeling in the world. Yeah, I mean, like, you know, every paper has their sort of flavor. Like the Times is going to be more interested in you know, sort of the worker side of things, the labor side of things. The Journal is going to be more interested in how it affects businesses. And so we'll cover things very differently from that perspective. But that's not, I think in both papers, like the staff is largely liberal. I don't know. I see it at Breitbart and Fox News and, like MSNBC. Like I get that, but that's not the majority of the way people consume their news. Like, I mean, the majority of printed news comes from credible outlets that have this sort of like, our job is to find the truth. Like that's what motivates us. And like, as a profession, we attack each other when somebody gets something wrong. So, and
it's more like a scientific discourse in that sense.
Oh, totally.
Like,
yeah.
Yeah. I was just, I just remembered, the story about lawsuits, libel lawsuits against, it was like a liberal anchor and a Fox News anchor. They were both thrown out, and they said, well, you can't hold these hosts to saying lies about people or being libelous, because everyone knows they're not telling the truth. And that was the grounds that the lawsuit was thrown out. Like, we assume that they're just going to be telling us lies. So you can't just say they're doing spouting falsehoods.
Unaware of that, but that's very dispiriting. Yeah, I mean, I used to think that anyone who sues any journalist is absurd, but I don't know, like some of the stuff that we saw with the voting, it's just like some of the lies you see on like Fox News and et cetera are really kind of disconcerting as a sort of standard journalist with credibility.
But it sounds like what you're saying is newspapers and print journalism seems to have sort of resisted some sort of capture by market forces more so than the.
Yeah, I mean that's my view. Look, like the stuff happens at the margins, but in terms of just how you end up framing something and sort of the way you look at it. But I don't like the concept that a journalist would like distort facts intentionally is like it just doesn't exist at any like vaguely credible outlet in my view. And it's just to me like the craziest thing about it. It's like, well, if people just say out loud that they're distorting it, then people think they must be distorting it, and it's like that's all it takes. So let me give you a story. I wrote about it. Meme stocks have really become this much like politics or religion where people just so fervently believe something.
Like GameStop, is that?
Yeah.
Okay.
So they so fervently believe in the stock they're invested in that facts do not matter. So I wrote a story about this company going public through a SPAC, but so an electric car company that was at the time like the market was valuing it at like twice the valuation of Ford, and it had yet to sell a car. And it's called Lucid Motors. So I just wrote a story saying like, this is kind of crazy. But let's just put that out there. And then that wasn't even, nobody cared about the story. They cared about one line in the story, which I said, according to a person familiar with the matter, a deal isn't imminent, because it was negotiating its merger with this company. And everyone on Reddit had, for some reason, convinced themselves that a deal was going to happen within a day or two. Like there was no evidence for that, but they thought that. And so I talked to someone involved in the deal, and I wrote like, a deal isn't imminent, but talks are continuing. And I got more hate mail than I've ever gotten in my life. Because the stock went down like 7%. And everyone called me a market manipulator. That would be the most polite thing anyone said. Like the conclusion from these crazies was that I had just intentionally done this, I guess, to help my own portfolio, to make up a line that said a deal isn't imminent. And BTW, a deal wasn't imminent. It took 3 more weeks, and then it happened. Like as kind of the story said. But the point being that it was very easy within this echo chamber to say, look at this echo chamber, by the way, which had been created by another journalist that said at a reputable outlet 3 weeks earlier that said these companies are in talks. And so then the Reddit community had to convince itself, not only are they in talks, but it's imminent. And then when another journalist from another credible outlet says the talks are continuing, but it's not imminent, the conclusion is the first journalist was right, and the second journalist is a clear market manipulator. And so no evidence for either of those things, right? But that is the conclusion, and that's what happens in these echo chambers, and it's very dangerous, and it melts minds, and it makes me very dispirited about democracy and capitalism and society. So that's a longer answer than you wanted, but I think it's incredibly dangerous, and like again, we're motivated here to like tell the truth and bring truth to people, and then the people who are least are sort of most skeptical of that are the ones that are obsessing about things that aren't true.
Yeah, that is. Thank you for sharing that story. That's sobering. And any thoughts on
very easy to perpetuate? Because then everyone online was like, "Look at all these market manipulators," and it's like, you mean all these journalists?
How do we defend against that? Because social media created the echo chambers, right? Like that's
right. So I'll give you my personal, certainly not Wall Street Journal endorsed view that I've been trying to get other people to think about. And this isn't a real solution, but it's sort of a framework. So in the 1950s, or whenever broadcast TV was taking off, and the same thing happened with broadcast radio, the government was like, hey, that's cool if you companies want to like broadcast stuff over our airwaves, but all we ask is that once a day you put on the news. And then it actually said it has to be sort of objective, fair news. But the main point being like you put the news on for everyone. So everyone, when they turn this thing on, like they'll get I Love Lucy or whatever, but they also get news. And so then for a long time, you really had this concept of a shared truth where everyone was listening to 3 anchors a day telling them pretty similar news. And it's like, oh, there's a Cold War going on. Here's what we know about the Cold War. Then that went away. Then they also got rid of the fairness aspect, which kind of gave rise to Fox News and co. But then today, there's no shared set of facts. So how would you do that in the age of social media? I don't know. I mean, like you could see the government doing something like, I guess the equivalent would be like 1 in 5 posts in the Facebook feed has to be news from a credible outlet. I mean, I'm not offering a prescriptive way of like how to regulate this, but like something where we are pushed objective facts is really important. And actually, I often tell people the tale of when we lived together and we're getting 3 papers a day. And one of us read the comics, the other read the rest of the paper. But the point being that like this local paper, like a lot of people do subscribe for sports or comics, but when it comes, you at least see the headlines, and it's like, oh look, there's a war in Iraq going on. And
the comics, they always got to address the like stuff that's going on. So I'd be like reading the comics, and I'd be like, huh, there's a war in Iraq.
Dilbert hates the Taliban. But because we don't have a paper with just sort of plastering it in front of us when we look on the table, that even if you aren't interested in the news, that you at least like are aware of it, that now you only get what's coming in your social media echo chamber. And that's really scary.
Yeah. My habit for a long time was just to like ask people when I was out, like, hey, anything newsworthy? Like I don't read the paper. So, and then if they knew something, they would be like, well, let me tell you, like, did you know we went to the moon? And I was like, no, how about that? Or whatever it might be. So that was always a good, conversation scheme. But I also personally have been experimenting with, like if I take 2 weeks off of consuming anything, like no books, no social media, no TV, like what is that like? And it, it changes like? your thought patterns. All of a sudden you're paying attention to a lot of different things. It's much more peaceful, but instead of thinking about like, wow, like there's so many different agendas at play in economics and like the whole thing's gonna, the bubble's about to burst and all this stuff. Instead, I'm thinking about like, how can I grow more potatoes and, like how can I entertain my kids more? So it's definitely like an entire different set of thoughts when you cut out nicer. Consumption.
Yeah, I took Twitter off my phone and was largely good at not finding workarounds where I just go through the browser. And my life was better. And now, like, I've gotten in the habit of going through the browser, and my life is worse again. So, yeah, I think it would be nice if personally, I think things would be a lot better if we had no social media.
You've given us a lot of time. I know you're reporting full time while you're launching this book. So thank you. Is there anything that we didn't touch on about the WeWork story that you think is important to mention that we didn't get to?
I don't know. I mean, I guess like the other kind of stuff about Adam that is really interesting to me is just how increasingly out of touch he got. So it's one thing if you start in 2011 thinking like, I want to be a billionaire. But then it was never enough. So as more and more money rolled in, he thought that he told like employees at WeWork, like they were going to play a role in the brokering an Israeli-Palestinian peace agreement. And, that, WeWork could solve world hunger, and provide a home for all the world's orphans. And it's like, he just was completely removed from real life. And it was kind of astounding to watch not only would people keep giving him money, but then like there were a lot of smart people around him, who were just there kind of thinking like they were growing increasingly concerned, but they still thought it was like normal enough, as opposed to being like, what am I doing here?
Yeah. Interesting. And maybe it's like this sunk cost because they were already bought in and there's cognitive dissonance kind of thing.
Like it was really interesting reporting the book because like this was, happening increasing number of months away from the fall. And then like people were getting new jobs. And so then we just, especially like 9 months after the fall, like people were telling us, we just kept hearing again and again, like, man, I do not know what I was thinking. It's like I didn't realize just how crazy that was. And some of these were like 24-year-olds who had never been in another job, but other of them were a lot more experienced executives, and they're human minds are really malleable, and it's really easy to just sort of, especially when the optimism is involved, like it's really easy to believe a story because that's the thing we want to do. We don't want to disbelieve people. And I don't even think WeWork is the tale of somebody intentionally fooling someone. I think it's the tale of somebody fooling himself and then fooling others, to sort of just always believe in the biggest best, and it happens to be the most lucrative.
You've said a couple times we have an optimism bias, but science has sort of shown that we actually have a negativity bias. Like
is that right?
we pay attention to things we're afraid of to keep us alive, essentially, and that's why it's so much harder. Like people fall into depression instead of falling into joy. So it's just kind of an interesting contrast, but it sounds like
I'll trust you on that more. I guess my sense is with investing, it tends to be an optimism bias. I'm glad to hear that the world is more like me than I thought, overall scientifically.
Well, I think personally I'm an optimist. Sort of, they've shown that it's largely genetic how happy and optimistic you are. You can change your set point a little bit, with meditation and gratitude and all this stuff. But so if you're a super optimist and you're hanging out with someone who's genetically looking for the problems, like you're gonna have a hard time like seeing eye to eye.
Man, I do not understand how optimists do it. Like, so my co-author, Maureen Farrell, is much more optimistic than I, but I had actually briefly, mistakenly given into optimism about how that our book was just going to kill it off the shelves in the first week, and man, it is just crushing when that doesn't happen. Like sales are like good, I'm not complaining, but I just was like had my head in the clouds for that the whole world was just like gonna rapidly gobble up the WeWork story. And don't you realize when these things don't happen, isn't that crushing?
Well, my publisher, when I wrote my book, they were like, we don't even bring on authors if we don't think we can sell 10 to 20,000 copies. And I was like, I'm selling 20,000. And it was more like 3,000. So
and that's pretty good. Like, I mean, the vast majority of these books don't sell it. Like, they barely sell anything.
Yeah. It's it's just like when you expect, you're like, okay, book funded retirement, here I come.
Anyway, I learned my lesson. I'll never be optimistic.
$2 a book. Never again. All right. Eliot Brown, Wall Street Journal, The Cult of We. Thanks so much for coming on the show. Great to catch up as always.
Good to see you.
All right. Talk soon.